Hi everyone, welcome back to Corporate Decoder. Today we're diving into a report from the Federal Home Loan Bank of Topeka, which might sound a little dry, but trust me, it involves numbers that could affect how easily banks can lend money to people. It's like looking at the engine that keeps the lending machine running. We'll be focusing on some key details about their financial obligations. Think of it as checking the bank's credit card bill to see how much they owe. Before we jump in, if you like getting the real story behind corporate filings, please subscribe. We also have a Discord community linked in the description below. Come join us. This report is a Form 8K, which companies use to announce big news or events to the Securities and Exchange Commission, or SEC. It's like a company shouting from the rooftops, hey, we did something important. This particular report is dated April 30, 2025, so it's fairly recent. It's like getting the latest score in a game. The Federal Home Loan Bank of Topeka, or FHLBank, is the main player here. It's not your everyday bank. It's one of 11 federal home loan banks in the United States. These banks help smaller local banks provide money for things like home loans. They're kind of like banks for banks. This section talks about direct financial obligations. That's a fancy way of saying debts or promises to pay money. It's like when you take out a loan and have a direct obligation to pay it back. The FHL Bank gets most of its money by selling consolidated obligations, which are essentially bonds and discount notes. Think of these as IOUs that investors buy and the bank promises to pay back later. These aren't just Topeka's problem, they are the joint responsibility of all 11 federal home loan banks. This means that if one bank can't pay, the others might have to chip in. The Federal Housing Finance Agency, or Finance Agency, keeps an eye on these banks. They can even tell one bank to pay the debts of another, if needed. It's like having a financial referee. The report emphasizes that these obligations are backed by the financial strength of the 11 banks and not guaranteed by the government. Now, let's look at Schedule A. This is where the interesting numbers are. It lists all the bonds and discount notes that the Federal Home Loan Banks have promised to issue and that Topeka is responsible for. This schedule gives us a snapshot of the bank's borrowing activity. It's like looking at their loan agreements. Alright, let's dive into some of the numbers. We are going to see the bank par, which is how much each bond is worth. One bond identified by the code 3-130B66B7 was traded on April 30, 2025 and will mature on May 14, 2035. The coupon currently $50 million. That means the bank promised to pay back $50 million plus 5% interest each year until 2035. This bond has an optional principal redemption. Think of this as the bank reserves the right to pay off the bond early. Another bond, 3-130B66P6, also traded on April 30, 2025, matures much sooner, on June 1, 2026, with an interest rate of 4.38%. Its bank par is much larger at $150 million. This means a bigger promise to pay back, but over a shorter time. There's also a discount note code 3-130B67D2 traded on May 1, 2025, maturing on August 29, 2025. This one is for a whopping $500 million. This is a non-calv note, which means the bank can't pay it off early. Also, it's a variable single index floater, which means the interest rate can go up or down. There are different call types, as we mentioned earlier. Optional principal redemption means the bank can choose to pay off the bond early. Non-callable means they can't. There are also different call styles. American bonds can be paid off any time after a certain date. Bermudan bonds can only be paid off on specific dates. European bonds can only be paid off on one particular date. Finally, there's the rate type. Fixed constant means the interest rate stays the same. Variable single index floater means the interest rate changes based on an index, like a market interest rate. So what's the big picture here? The Federal Home Loan Bank of Topeka is actively borrowing money through these bonds and notes. The amounts are significant, especially the $500 million discount notes. The variety of terms like call types and rate types shows the bank is managing its debt in different ways. This is all part of how the bank helps provide money for local lenders, influencing things like mortgage rates. Now let's put on our thinking caps and analyze what this all means. The FHL Bank of Topeka is basically a key player in the housing market, since it provides funds for local banks. This report shows they are actively borrowing, which means they are likely providing funds to those local banks, which could help keep mortgage rates stable or even lower them. On the other hand, if interest rates rise, these debts could become more expensive, which could squeeze the bank and potentially lead to higher borrowing costs for local lenders. It's a balancing act. One notable risk is the sheer size of some of these obligations. The $500 million discount notes are a big commitment. If the bank runs into financial trouble, paying back these debts could be a challenge. Also, the fact that these obligations are jointly backed by all 11 federal home loan banks means that if one bank falters, it could affect the others. Overall, the FHLBank of Topeka seems to be doing its job of providing liquidity to the housing market. But like any financial institution, it faces risks from its debt obligations and the overall economic climate. Alright, that's our breakdown of the Federal Home Loan Bank of Topeka's latest filing. What's your take on these numbers and what they signal for the bank and the housing market? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.